And gentlemen, welcome to the Fintech Frenzy. Today, we do not have a lot of news. It was a quiet day for the most part in the markets, especially whenever it comes to fintech stocks. But that being said, there is a bunch of stuff that I do want to talk about, including talking about how to be a little bit more of a smarter, more patient investor. I shouldn't say smarter because I'm sure there's going to be people that make a lot more money than me doing the opposite of what I'm saying. But we're going to try to be patient investors. I think that that's going to be a prudent thing here. And so, yes, this is clickbait. SoFi stock is going down as of today. It's not a lot, but in this small period, you start to get people that after seeing 7 or 8 days of really green days, they start to see, hey, should I start selling my stock? Like maybe this is a time to run and hide, potentially try to sell out and buy back in whenever we're at the $10, whenever we're at $7, what have you. So one of the things that I think is very important is we're going to talk about a couple different things on why it's important to potentially not sell that way, and why to have more of a calmer head whenever looking at not only SoFi but other companies that you believe in on the long term. So one thing that did happen today, and we'll talk about this, which is quite exciting, was John Eck from Jefferies actually put a $19 price target on SoFi, up from $13. And before $13, he had a $10 price target on SoFi. And before that, he had a $9 price target on SoFi. So it's just been up, 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 up. It's been very good from, their perspective. Now, dude, buy the dip. I mean, it hasn't even really dipped. Like I said, it is a little bit of a, clickbaity title, but it is very important, especially for newer investors, to understand what to do if SoFi breaks into the 14s, 13s, something along these lines. What is the thing that you should do during these periods? So, I know everyone, whenever I bring up some larger investors, like to say, oh, well, Tanner, you're not one of the greatest investors of all time. I get it. But I think that that's why I look to the greatest investors to say, hey, how should I be? How should I be acting in these times? And Warren Buffett has this amazing quote that, everyone always likes to repeat, but for some of the newer people, it's a great learning lesson, is that the stock market is a machine that transfers money from the inpatient to the patient. Okay. And that involves times like this whenever potentially people are worried about some level of a correction, right? Now, some of this might be jitters on the idea that rate cuts might not be happening as fast, and that might not be jitters that last very long. Could be jitters on the idea that there is tariffs that could come for Mexico and Canada. Hey, but overall, this is something that, in my belief, you should hold through. You should hold your positions through, because selling also incurs a big risk as well. Although you're locking in some gains and you make some money, it's probably not the fact that you are going to keep it at that level. You're probably going to want to buy back in. So not only do you have to be right on the selling side, you also have to be right on the buying side. Now, some people suggest that, because I was explaining this concept before of how you have to be right whenever you're buying back in, and people said, okay, well, I don't care if I buy back in at, $14 and then it goes down to 13 and then starts to recover. I still got a better average, right? The part is that's really risky is, what if it doesn't drop all the way down to 14? What if it goes down to, from 1530 down to 1480 and you wanted to get back at 1450? It never quite touched there and then started to run to break new 52-week highs. So this is another reason why I do not encourage selling long-term positions like this. I always say, let your winners ride. It's for this exact reason, right? You're going to want to buy and hold positions that you think are compounding at great rates. This is what growth investing is. There's been tons of studies talking about how, like, the human brain can't even concept compound interest. So just if you're patient enough, the growth in these positions is probably more than people anticipate. But here, let me go ahead and bring up this really quick. Another great one, by the way, is Peter Lynch's quote, which he talks about how does it go again? It's more people lose money trying to prepare themselves for corrections than actual corrections themselves. So also, I wouldn't fret about that. I see a bunch of people in the future investing Discord, which, by the way, if you guys aren't on it, please join. I'm having a real problem, by the way, with my camera. So if it ends up turning off, I don't know what I'm going to do. It's seemingly not keeping a charge as fast as like it's currently plugged in and being charged, but it's seeming like the battery is draining faster than I'm charging it. So I may need to swap the battery out, but this might be the episode that we end up losing it, and I got to go buy another one. And I do not have a backup camera set up. So yeah, maybe we should rush through, make sure that this is a quick episode and that we get through a lot of the stories that I do want to talk about. So let me just do that really quick. I'm going to get through some of the pieces, and then if we do have to drop early, I can charge my camera and go on. All right. First off, Rakuten. So, and a new background. So that's cool. I really want to get people on the Discord. So there you go. Anyway, Rakuten. So SoFi Plus members can now get a little extra bonus and earn cash back at Rakuten, which is essentially promoting coupons and partnering with companies to get a little bit more cash back. Cool little shopping platform for you guys, but it is highlighting how SoFi can get into a bigger and bigger marketplace with these types of companies, and how banks can actually become large commerce platforms. Okay, Nubank has done it very well. I think PayPal will do it very well. I think there will be a lot of these different companies. Or Cash App will do this very well. Obviously Shop, but that's literally what they're designed for. And that hopefully SoFi can also get its footing into not only bringing deposits in, but also capturing those withdrawals as well through monetizable ways like spending. All right. Who is selling SoFi? Captain Crunch, brother. You're the biggest bear I know. If you're the only person that I would tell to sell SoFi stock, because this is the thing. If you don't believe in the long-term aspect of SoFi and you're trying to play this position as if this is greater fool theory, where you just think that someone else is going to pay more for you for this position, then please do not hold SoFi stock. Be like Kathy. Sell out in that position, okay? But if you look at the long-term growth perspectives of this company, which should be very exciting, and even like the Jefferies analyst that just put a $19 price target on this, I'll probably do a video breaking this down in great detail because they did show off some great numbers here. But his expectations for full year of 2026 is 55 cents. That is the absolute lowest that management said that they were going to do. 55 cents. They said that for the end of 2025 revenue, which I just uploaded in my video, they were expecting around $2.83 billion in revenue, which is lower than Wall Street consensus by quite a large margin. 29 cents of EPS in 2025. I mean, these are lower than expectations. So, and he's putting a $19 price target on this company. This is what's going to happen. So not only are we going to get, there's going to be two types of analysts that come out over the next little bit. One that show off price appreciation because they see momentum in the stock and they see more retail and institutional money pouring in. Fine. Then there's going to be another form of analyst revisions, which I really do think are powerful, which is that they see the company in a better light. Those 55 cent expectations come to 80 cent expectations. And where I really think that all these analysts are not pricing in, and the reason why he even gave it 55 cents and not 50 cents, for example, is I think that he was trying to put it within management expectations because that's probably what clients were asking for. But also, they don't want, it's very hard for them to model out anything more than that. It was sort of like what I was facing in Q3 with financial services, because they said that they were going to grow by 80%. It's like, how are you going to grow? This doesn't make any sense until like financial services ended up showing off that that's where they were going to write all the loan platform business revenue, which was an additional $43 million in that quarter that we were not expecting the quarter before. So very hard to price in what you can't expect. But I'm going to trust management in these expectations because obviously they do get to see sort of firsthand view of what's going on. And every guide that they've done has been conservative, not over the moon. I'm going to continue to think that they are making very conservative expectations here. I'm selling when growth slows. Well, that's interesting because growth for members has slowed over the last, well, not just members. I mean, revenue, like all pretty much every metric, it has slowed. The reason why I continue to hold, and hopefully that this is like, I don't think that he's wrong in his comment. It just might not be fully articulated because you get like 280 characters to say what you want. But one thing that I think is very interesting for SoFi is I do believe that there is going to be a re-acceleration for growth. That is really where the bull case is going to come through. If you do believe that SoFi gets to 68 to 80 cents by 2026, then you're looking at a PEG ratio that's less than 1 times. Okay? Member growth that's going to be spiking like crazy, and there's so many different aspects that they're going to be lowering expenses, improving customer acquisition costs, increasing lifetime value per customer. Very exciting. It has not slowed enough, he says. Awesome. I'm on board for the long term. I agree. If you can take a look, this is why I think so. There's been a couple people that have said on X today that SoFi is a meme stock and it's trading like the likes of, they named a bunch of these companies that some people are getting into with, well, I don't want to bash any of the companies if you guys are into them, but some of these drone taxi companies that might not have any revenue yet, but could eventually into the future, and all these sort of things, which are still growth stocks. They can still end up being great investments, but I don't think that you can put SoFi into that mix. They are like net income positive, growing members like crazy. These are not aspirational futures that SoFi has, but ones that are actually developing in front of our eyes. So I think it's a little bit different, but to each his own. If we take a look here, if you're betting on this company in terms of average revenue per user, which is climbing, and then you look at it over the course of time, well, not only do they have more members that are staying on the platform, getting new products per member, but there's new members coming on. So not only are you compounding the productivity on a per user basis, but you're also compounding the ability to get on new members. Plus, we just in this most recent quarter hit the newest high for new members, 756,000 new member adds. And I think that that's going to break a new record in Q4. And then I think we're going to get a series of record breaks in 2025 as we hit unbelievable growth rates of members, either between 3 to 4 million for 2025. And by the way, that is all predicated on the loan platform business. Before then, they'd have to look at their metrics completely differently. But now they just have to look at it on, can we acquire a member through lending? So customer acquisition per customer is going to climb, but so is, the average revenue per user, because each user that we try to, get on the platform as being a lending revenue, or like a lending customer, which is going to be immediately sold. So there's no risk, total fee-based revenue, is eventually going to cross-sell to deposit accounts, SoFi Invest, everything else like that. More referrals through more members. Great business. Products is going to climb. We actually might see products per user actually slow down in 2025, just because I think that there's going to be a more focus on getting members in for lending specifically. But that's fine. That is perfectly fine. Galileo is going to be the sort of the unknown of what's going to happen in 2025. We hope, we pray, but we don't know. And if you're considering this as a meme company, it's like, all right, well, I'd like to see some of this, like even Upstart, exact same business model, same everything. And they've had waves of good behavior and waves of not so good behavior. where SoFi just looks like this business that's essentially going in one direction. And aside from this, like this $181 million of quarterly adjusted EBITDA was sort of a one-time event. So if you were to just look at them potentially not getting it, it would still be a very straight line. However, I'd rather have it than have a quarter that we saw some exponential dip. If like in Q4 of 2023, we only saw 20 million. Well, it's like, it's one time, it's fine. But no, we actually saw it to the benefit of SoFi. Hey, you know what? It was 181 million, which throws off the trend, but to the positive side. Like, these are the problems that SoFi has. And I guess we had that problem with net income in Q3 of 2023 with their write-off from Goodwill. So I'd say that was a one-time expense. But yeah, this is not one of those businesses that looks poorly over time or even has like it's one of the things that I find so funny about SoFi, but also potentially why it gets the multiple that it has, is that it is such a linear business. Like, they get more members get more products, and then the cycle continues, and macro will play a larger and larger piece of the pie for SoFi. I think the thing is that macro is in such a favor going forward for SoFi, like Anthony Noto has said, that people should be very positive. And I think that we're going to see a stream of more of these very high teens and potentially $20 price ranges coming in soon. I could see, I think we'll see a $20+ price target very soon, especially like whenever we look at Robinhood, talk about how bullish the market is getting. You were getting mid-20s, mid-30s price targets. Month later, now we're getting $55 price targets for Robinhood. 51, 55, multiple price targets in the 50s, let alone the 40s, the 50s. It's very, very exciting. By end of year, I mean, the range is huge. I think it'll probably be 18 or something. I'll probably hold that. The upgrades will flow for sure. It has to. It has to. In the short term, there might be some pressure on SoFi and sort of like this is the one thing, right? Is I would not. Everyone's different. I'm just talking about from my own perspective. I believe in the long term of SoFi, and we're going to prices that we haven't seen before. But if we look at like let's go to Nubank, for example, because this is one that's also facing a little bit of pressure right now. If we look at Nubank here, you'll see all these times where it's run up to brand new highs, and Nubank at 1230 was unseen highs. And then it saw a massive pullback into the 10s. And then people said, I was getting hate mail again. Oh, what happened to this beautiful fintech that you said? Like, this is dead money now. And then watch it return back and then hit new highs again, and then break to, all the way down into the 9s at one point. Hate mail. Back to new highs. People thanking me. This is going to happen. We're going through dips and flows. It's the trend that we should be excited about. How do you find the trend? Where do you know where the trend is going to go into the future? Follow the fundamentals. Okay. And these can be extremely long, drawn out events. But whenever you have the macro in your favor and the fundamentals are growing, you can assume that there is going to be new money flowing into those companies. Right? Especially if the PEG ratio is below 1, at least for me. That's just the easiest way for me to say, okay, well, it still has a lot more room to grow. And then SoFi potentially could also start showing us reasons why they deserve an even higher multiple. Because by the time we actually do get to 1 times PEG, and let's say that brings us up to a price of near $20 a share, then, we could be at Q4 of 2024. We could end up having to revise the 2025, 2026 earnings. Let's say they bump the lower range, like let's say it's 80 to 55, and then they actually go, we're actually more comfortable to say it's going to be 60 to 80. Okay. Well, that tightening of the range, because we're getting closer to that target, would be very bullish. Now, if you're like shift 4, it could even be, brought down. What's funny is Shift 4 has shown their long-term guidance and actually brought down the top end, and yet the stock is at all-time highs right now because it was so undervalued that even their longest out like targets, shrinking the high end of it, is still bullish because they didn't even believe they were going to get anywhere in that range. So that's sort of where SoFi is as well. Like, no analyst is even believing that they're going to be in that 80 or 55 to 80 cent range. So if they even get anywhere in it, like, Wall Street's going to be excited. I think they're going to exceed it. It's just a matter of, if they can continue to execute. But according to that Jefferies analyst report, which I'm sure I'll do a video on later after this, they believe that SoFi is seeing a lot of macro benefits. Things like, app downloads and all of these things are looking very good for them outside of just what they're seeing on the fundamental side. Capital markets are coming back. Goldman is seeing a lot of that as well. So I don't know where you're going to see a lot of pullback or drawback for SoFi. Where do you see SoFi in February of 2025? I'm not here to tell you what to do with your options plays or anything like this, brother. Where do you see it on, let's say, I don't know, we'll just pick a date out, let's say February 16th. Are you guys talking about Kathy? Kathy can do what she wants. SoFi has shown that it doesn't care about how they're trading. It would be good if they were long. It's more money into the stock. I think at one point she held 14 million shares. It's not nothing. Like, that's a big shareholder, but she is dumping now. Price target for March 22nd, 2075. That's awesome. February 16th is a Monday or is a Sunday? All right. Kim Peek. Dude's got all the dates. Oh my God, I just got okay, so guys, I just got a package delivered that I'm super excited for you guys to see. I'm going to show off my studio. I've spent some money. I'm going to be upgrading the studio. It's going to look stupid. It's like, anyway, I'll show you that tomorrow, but it's just showed up at my door right now. So I'm going to get that. Is it time to panic, Tanner? No, I would not say so. I would say that it's a clickbait title to try to, like, this is going to be what happens in the Reddits and FinTwits and all these different areas. People are going to talk about how this is the top. My opinion, do not try to even find the top. Okay? Buy companies that you want to hold for the long term. Now, I say it over and over and over, but there will be a group that actually listens to me, and this is what I also want to say. It might not be in SoFi. I'm not saying to follow me in this trade, but what I can comfortably say as financial advice is that holding long-term is a very healthy thing to do, especially in companies that obviously perform well. Finding the companies that perform well fundamentally is what we were spending, all of our time doing. So, we'll never know for sure that what we're buying is going to work, but we can continue to try to look for evidence to try to tell us wrong. And I have not found that on SoFi yet. But this is why we build into our positions as we get more research, right? We don't see a stock trying to move quickly and then we get FOMO and pile into it and not realize what we're fully buying because we haven't done our research on it. No, we slowly build into our positions as we're learning the companies. So a little bit of that, like Roy was talking on the after hours, I think it was, about Stanley Druckenmiller's, invest, then investigate. I think that is true to some degree, but obviously what I'm trying to say is build into it. Thanks for all the financial advice. I mean, that is like, I feel comfortable with people saying, hey, you know what? I am going to buy and hold for long periods of time and try to diversify, try to do these things. I think those are safe practices that I really want to try to drive home for people. Because I think in this world of like retail investing and especially being online and stuff, you can start to really get into more and more aggressive positions, start to get into different avenues of investing that just continuously increase risk and always chasing higher and higher rewards, which is actually probably the worst thing that you can do. The average retail investor, which includes you guys and me, okay, is like 3 to 4% per year. Okay. Retail investors. This is why everyone says just buy the index. So either if you're one of those people, you are trading with emotions, you got to not do that. And you should just buy the indexes. It's not as fun, but like we're talking about life savings here. We're talking about like lots of money. You an advisor? I am an advisor. Actually, I am a financial advisor. So I know the corner you're trying to put me in, but I actually am. So now you're not my client, so but doesn't work, buddy. Haha. Yeah, didn't expect that, eh? Welcome. However, I sold my book of business. I'm not practicing, but I do have my licenses still. Is SoFi a buy? I don't know for you, but I like it. Yeah, so this is what I will wrap. I'll be done for your bootleg. Don't you worry. But people said that they didn't know that I was an NVIDIA shareholder, so I had to really prove it. So this is if you needed any more evidence, it's in the jacket. Bro, is $25 end of year possible? I would not see it. I mean, something drastic would have to happen. They'd have to you know, show something off that would be I don't think it would be possible. I mean, anything is possible. Palantir's at like Palantir in the 60s happened, so anything's possible. You never would think that some company would like Palantir would ever be bigger than Lockheed Martin, but it ended up doing that. So anything's possible. Have you abandoned Nubank stock? Abandoned. This is the panic that I'm talking about, where I don't talk about a company for a couple days. And like, even I think we talked about it yesterday. Have you abandoned it? No. I don't remember the last time I've sold shit. Like I just buy. we do small buys whenever we make some money and we pour it into companies that we love. Okay? You jumped into a pool to show that you were a SoFi shareholder last year because we were all underwater? Yes, sir. All right. Tevis 2.0 told Tevis to leave. Okay, so yeah, no, I'm not out of Nubank. I think that we could potentially go through a period where it's a little bit slower. But obviously, they are the biggest bank in Brazil, and they did that in 10 years. The first product that they ever ended up giving out was a credit card in 2014. And now they're bigger than the biggest bank in Brazil that was started in 1808. Okay. That was in 10 years. And you guys are debating on like, oh, well, maybe the foreign policy or this or that. Like, I forget it. Like, legitimately forget it. Like, you're betting on a company that got 100 million users in 10 years. Why can't we just hold this for 20 more years? Like, why can't we just look back on it in a little bit? Did I abandon it because I haven't talked about it in a week? Um, $17 to $18 is a realistic expectation. I think that's probably what I'd place it at, but it could also end at 15. I'm not calling my bet that it's going to end. Like I won't have short-term price targets like that. I just think that, you know what, there is definitely momentum, and there is some level of changing in the stock price. And I also think that indexes and funds are buying into this company now that they're realizing that there's 4 quarters of profitability, which is exactly what we were calling about for some time. Is there room for further growth? Well, they're in 3 countries, and they could be in many, 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 many more. They're eyeing, uh, getting into, um, what is it called? Middle East and Central Africa. No, what's the term? The Middle East and Africa? There's a word I'm missing in there. Anyway, they're looking in that region as well. They want their new targets. So what they've always said, whenever they got to 100,000 members, they said, okay, well, let's shoot for 1 million. Once they actually got to 1 million, they said, why don't we shoot for 10 million, then 100 million? Now they're shooting for 1 billion members. So do I think that there's more growth? 100%. They are literally looking at their customer base as a percentage of the total world population. I know what you can say, like, hey, they could put their targets on whatever they want. It doesn't mean that they get there, but I'm not going to bet against the company that was, you know, seed funded, what was it, 12, 18 billion or $18 million to becoming the largest bank in Brazil. Mena. Yeah. Thank you. Thank you. You are correct. Middle East, North Africa. Okay. Ladies and gentlemen, thank you all so much for watching, but this has been the episode. I did just put out a video today on my expectations for the loan platform business. Make sure you guys check that out. But coming up next for tomorrow is going to be the Jeffries analyst thing that ended up like his $19 price target. There's a lot of information in that report that I want to go through, talking about how honestly bearish I think that he's being. So, which is very exciting, because if they think that they can get to $19 on those fundamentals, wait till you actually see what I have to say. So, thank you all so much for watching. Really do appreciate your time, but bye for now.